Good evening, everyone, and welcome to Annual Markets Webinar 28th of May 2014. Today, our subject has a lot to do with money management, but it's a part of money management and it's part maybe of your future investment, and we will talk about compounding. Before I begin, a quick risk disclaimer, risk disclosure statement stating all the risks associated with the Forex market. By proceeding further, you're also accepting the risk disclaimer. Online educational materials are developed by Admiral Markets AS Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author, it's me in this case, and in no way it represents the actual suggestion for the trade. These are not AM UK's opinions, and the website in the video is not the .co.uk website, but the globalnews.com website. Forex is risky business. This is personal opinion only. This webinar is for informational and educational purposes only. So with having said that, we are ready to go. I think this webinar won't be so long, and as always, after the webinar finishes, after the webinar has ended, I will show you compounding Excel spreadsheet. So if you're interested to have it, you just need to email me and I will send it to you, of course. So today we are gonna talk about compounding, pros and cons, practical use of compounding, and I will show you the spreadsheet so you can use it to your advantage if you want to do compounding money management. Before we begin, of course, just a quick note. Today I posted a Euro GBP yen instead of Euro yen chart, but I hope that you have taken the trade because Euro yen went 30 pips down after the analysis. It went slightly up after the analysis and then it was rejected as planned. For GBP yen, direction was pretty good, but unfortunately GBP yen didn't make to point of confluence, but instead it went just slightly above this, slightly above the price after I made the analysis. The price was here and it was slightly above it and then it dropped down. So the direction was good, but unfortunately it didn't make to POC, so I didn't trade it. But Euro yen trade was good and we will see. So that was about today's trade. I hope that you have enjoyed the last couple session recaps, because the last session recaps was really great. GBP dollar went almost 100 pips and it was great to trade, really. Euro dollar was also good to trade. You remember I made an update of Euro dollar yesterday and basically that was it. Also dollar yen was quite good. So this last session recap gave more than 150 pips. We will see if there was more. So I hope that you at least got 20, 30, 50 out of that 150 pip pool. I hope that you traded GBP dollar as I was trading, as I was giving you proper sell zones, and you saw GBP was really good to sell. So hope that you made some money. As I told you last time, I was really hoping for that sell trade to kick in, and finally GBP dollar was sold. So don't forget to sign in for next session recap, which will be held on Monday, of course, because I will be making also possibly very, very good setups. So let's get back to the webinar. what is compounding, and then I will show you that spreadsheet, which if you're interested you can use to your advantage. So compounding is a very well known term. Investopedia defines compounding as the ability of an asset to generate earnings which are subsequently reinvested in order to generate their own earnings. So compounding is basically generating earnings from previous earnings. So the first profit taken is added to the account balance to create a new larger account balance. And the next profit is based on and added to the new larger balance. So that is basically what compounding is. In its simplest form, compounding would involve increasing trading size as soon as account value makes new high. You will have that also included in the spreadsheet, which I will show you later, because that is very good, because your profit and your volume traded will exponentially grow, and basically you will be happy, and your broker, in this case Admiral Markets, will of course be happy, because you will be generating a higher volume of trading by using compounding. Well, I can say concept is easily implementable while trading Forex market, because you can buy, you can sell very big number of vast number of markets that includes euro, dollar, Aussie, and whatever, 24 pairs, even more. So basically it's more applicable to stock market, but also in Forex market it's pretty applicable. But you know, some brokers are not very fond of giving good spreads, and if you want to compound, basically you need to day trade, because you will be making money on daily basis, and because of that you need to enjoy good spreads. That is why, of course, advise using Admiral Markets, because of the great spreads. Also, vast majority of retail traders need to use leverage to some degree in order to trade standard size lots. So you need to have that take that into consideration when planning how compounding should be employed in your account. So I need to say that benefits of compounding can be easily noticed as soon as you start generating profits. So there is a very basic example. So let's say that we have £1,000 or dollars, whatever, in our trading account. So if we were to make a 10% return every month for a year and not reinvest, we would have made 120% of return. So that is hypothesis, and that is a theory. So in theory, basically you can make it, but in order to make a 10%, as you already know, it's too much, because my usual advice for making money on monthly basis is anywhere from 2 to 10%. So if you fit from anywhere from 2 to 10%, you can be on a good way to go and generate nice earnings. Also, we need to talk about some things about Albert Einstein, because Albert Einstein was also he was known to use a word compound interest in some of his theses. So Albert Einstein told us that compounding interest is the greatest mathematical discovery of all time. So he thinks that he thought at least that compounding was the greatest mathematical discovery. But easy to achieve a good compounding? Is it easy to achieve a good compounding? I cannot say it's easy to achieve, because you need to make money on constant basis, and in order to make money on constant basis, of course, you need to use a little bit of leverage, and you need to have a good method and a good system. Well, we can say basically that some of his theses were were true, particularly because unlike the trigonometry or algebra we studied back in high school, compounding can be easily used in everyday life. You can compare compounding also with this. You put money in your little piggy, and that piggy starts to grow, and the piggy eventually becomes a big, full-fledged pig, right? So basically, whenever you insert your coins here, it will become bigger. So it's a form which you can, of course, use in your real life. The wonder of compounding, because sometimes it's called compound interest, basically transforms our working money into investment. And investment is highly powerful income generating tool. So having said that compounding is the process of generating earnings by reinvested earnings, we need at least two things. We need the reinvestment of earnings and time. The more time we give to our investments, the more we will be able to accelerate the income potential of our original investment, which will take in turn the pressure out of us. So you may be wondering if the whole concept of compounding and how it's linked to the Forex market. Well, some professional traders need to have a separate accounts, and I advise if you want to use compounding in your everyday trading, you need basically to have a separate account. Do not use it in the account which you need to build, which you will later withdraw the money from. So basically you need to have a separate account. It's good. It's the same as you have two partitions on your hard disk drive. The first partition is used for Windows 7, 8, whatever. So you use your first partition to install Windows operating system, and your second partition, let's call it D partition, is used for other programs, games, and I don't know, other market platform for trading. So basically, that is what I advise. If you want to go compounding, you should have a separate account. If you want to use it accordingly, Forex market and trading, you need to understand the power of compounding. You need to understand it pretty much as professional traders understand it. You need to make important and to make more importance on becoming profitable in the long run than doubling your money over a short period of time. So that is, again, you need to use winning method and strategy, and of course using intraday trading, because if you want to make money consistently every day, that will require you to basically make intraday trades, intraday scalps, whatever you want to use in order to make money. So intraday scalps, intraday positioning, and before you use that, of course, you need to have a good method which will give you the possibility of doing so. Profit management is also very, very important. If you know how to use money management, you will also know how to use a proper profit management. So guys, I need to tell you, you probably know that many traders and most of traders focus on doubling and trying to double the initial investment in a very short period of time. You forget, and all of you who want to do that forget, that Forex is like every other business. It needs time to grow. So basically it takes time. So to read Forex as a business, do not treat it as a gambling size of your mind, and do not try to gamble with your own money. So treat it professionally as I do, and treat it professionally as you would any other business. Don't let that other gambling mind of you, because we humans in our core are gamblers. We are very adaptable beings, but also when we see the opportunity, we like to gamble. We like to raise our lots. We like to take what we can. That is in our nature. So put that side of you into other plan. Try to put it out, especially if you want to do compounding. Compounding is not the same as trading, building a account which needs to be built, or trading the account which has already been built. Compounding is a sort of investment for your future self. Treat it as a possible pension or a possible insurance, if you will. Pros for compounding is it's the fast way of to build the account. It takes time, but it's maybe a paradox, but you will see that if you don't withdraw the money from your account, and if you're successful in doing the compounding plan as you want to do, as that spreadsheet which I will give you tells you to do, then it will be a fast way to build the account, because you won't be withdrawing the money, and you will be using basically a power of compounding in its core. That is what also I told you that is also what Albert Einstein told you to do, and what Albert Einstein told us to do with compounding. So basically, he was the great, maybe the greatest mathematician of all the time, of at least in the top 3 or top 5. And basically what we can say is it is a fast way to build the account, but you should not treat it like that, if you understand what I want to say. I will show you that later in the example and in the spreadsheet what it means. You can start with lower account. That is also a good thing, because if you start with lower account, in the time that account can be raised. So lower accounts are also very susceptible to the power of compounding, and lower accounts can be built over a period of time. In the spreadsheet which I included in this presentation, you will see what the power of compounding is over $1,000 account. And you know already the $1,000 in Forex market is not a big money. It's something which basically you should at least have if you want to start your Forex career. Higher balance, higher profits, that will mean whenever your balance gets higher, that would mean that also your profits will be higher, because you will be also increasing not just your equity and balance, you will be increasing your lot size. It's suitable for long-term investment, because long-term investment is something we want to do if we want to make a pension or some social insurance for us or our family. The bigger the account, the higher the volume can be traded. So basically, that is what I was talking about. The bigger the account is, also the higher the volume you will be trading. Also, the problem is that most people are very impatient and simply switch from one idea to another every month. That is not how you will achieve long-term profits with Forex trading. Forex trading is for people who are ready to wait and be patient. So basically, you do not need to go through the process of trying many strategies. Compounding will work only if you have already found your own strategy and you don't have the risk of blowing your account up. If you have a risk, if you risk to blow your account up, that wouldn't be good for compounding, because compounding is not very flexible as it is account which has been building over the period of time. Because from that account you can build account, you can withdraw the money from the account, you can use the account for trading, but for compounding accounts the main point is to build basically a long-term investment which you will later be using for your social insurance or your social life. So you need to use the power of money management, which we will talk about so many times. Then you need to understand compounding interest, and you need to have a discipline to make money. Until you can trade the strategy without a thought, delay, or emotion, and until you can only risk 2% of your capital on every trade, you're not good to go for compounding. So if you're ready to go with compounding, you need to put, let's say, at least $1,000 into your account, and you can have over 100 losing trades in a row before you have no money left. So that is how we do with proper money management and proper lot size. Now the only problem with that is, it's not the only problem, but it's one of the problems. It will take a while, because if you learn how to trade and use only 2% of your risk and money management, it will take a while. Also, the problem will arise if you use bad scalping systems, because as you already know, how I teach traders to do and what I teach traders to do is you don't need to switch from a system to system. If you're a novice trader, then okay, you switch from system to system until you find a good method. If you're not sure what the good method is, then go again. We have been giving you, at least me on my webinars, I was giving you many, and I will be giving you also plethora of systems. So you need to choose one, and you need to give it a chance, not jump from a system to a system. If you're not sure what system is for you, then go for a course, roll a course, and try to find a mentor which will teach you how to build your account, how to build a proper strategy. I know it's easier if you have a mentor, but that requires money. It's not free, because those systems which are taught by mentors should have a track record. So whenever you want to go for a system which is paid, ask for a track record. At least that is what I do with my students. I always show them my track record so they know what they are going for. So you should also do that. If you want to try system for free, don't worry, I'm here. I will be explaining those systems of my webinars. But it will take a time to get into the matter of the system, to get into the thing of the system. And I won't be presenting you bad scalping systems. Those things which I've been presenting you all the time are really good systems and really good strategies. But maybe they're not suitable for every kind of trader. Also, it's not just about systems. It's about experience in money management. If you're not experienced in money management, then you should not try to grow your account. I have prepared a spreadsheet which I will show you, but before I show you, I need also to tell you that if you start with, let's say, $2,000 and you lose 5 trades in a row, let's say with 2% of a risk, you will be down to $180. So you will be still trading 2% per trade. And then to go back to break even, you will have to win at least 6 trades in a row. So basically that is connected to your psychology. That will lead you to wanting to overtrade, to get back to break even faster. So you may take less quality trade entries, start moving your profit targets and stop losses, and basically you will be missing a lot because your psychology has overtaken you. So you need to be experienced in money management. You need to have experience with a system or a method in order to do compounding as you should. So this is the Expo spreadsheet. I will show you later the real chart, real-time spreadsheet, and you can see in this example that basically this is very easy to use. In this field, you should put your initial account size, then maximum stop loss risk in pips, then maximum account risk per trade, which is, of course, I recommend it 2%. Then how many pips won per day. Then basically this spreadsheet will do it automatically for you. So that is very easy to use. So look at this example. If your account balance was only $1,000 after 42 successful trades, so maybe you will have 3 or 4 trades per day. That is why I was talking about and why I was mentioning methods which can give you a possibility to trade not only 2 or 3 pairs. So you need to take at least 10 pairs to trade. And because of that, you can basically trade multiple pairs and make multiple entries during the day. So let's say that we make only averagely 1 trade per day. After 42 days, your account will be doubled. And that is the power of compounding. That is the power of compounding. This spreadsheet will also calculate a proper lot size for that trade. And that is very, very important, because you probably know up to now that each and single entry you make on your platform is based on stop loss, not on your target price. It's based on your stop loss. So basically, in this example, you can see that 42 successful trades, and let's call it 42 days, will lead you to doubling the account. Okay? So that is why you need to have a good method, which you can use for building the account, which you can use for making you a good fortune, a social stability. Because the thing is, the biggest freedom is financial freedom. The biggest freedom is financial freedom. So this is that spreadsheet, and let's say, just for the sake of this example, you can use with $500 initial account size. Your stop loss is, let's say, 50 pips. You make 2%. Let's say your risk is 2% per trade, and you can see that after, let's say, 3 months from initial 500, your account is $3,400. It's very achievable, as I say, if you have good method, if you know about compounding, and it's good to have a separate account. Lot size is basically calculated through the formula, which is based on maximum risk per trade. So basically, if you use a lot size of 0.02, you will be risking $10, and you usually will, if you make 30 pips, you will be making $6. Let's say that you are making 10 pips per day, then you will want $2. So stop loss is not about the take profit. It is dependable of your method. If your method, it's nothing is the same. With Camarilla MACD, I need to use that example because it's my system and I trade it. I have 4 different types of trading. In Camarilla MACD, I use 1 hour for intraday setups, which I post for on Admiral Markets blog, Forex Factory, and a couple of days ago also on Forex Street. So 1 hour is for my intraday setups. Scalping is 5 minutes. Breakouts are 1 hour, and counter trend trades are 1 hour time frame. Profit targets are not the same for breakouts, for scalping, for counter trend trading, and for intraday trading. If I would go intraday, my target pips per day will be usually anywhere between 30 and 50 because I trade 24 pairs. Now, out of those 24 pairs, I may find 3 pairs which are suitable for intraday trade. And then if I take 15 pips, because I use trailing stop, my target pips will be usually around 45. With 45 pips, my basically profit will be around $9. But I don't use 50 pip stop, almost never. My average pip stop is 30. So basically, this is how your calculator works. It uses your stop loss to count the proper lot size based on your account balance. And this calculator is very, very good. So if you want to use compounding, I advise you to use this calculator. Okay? Now, let's say that you have started with $10,000. And let's say that, because I don't know how many of you are Camarilla MACD traders, let's say that you average make 10 pips per day. Now, this is the power of compounding. After 3 months time, or it doesn't have to be 3 months time. It needs to be 180 good successful trades. Your account will be tripled. $32,900. After a year, you just need to press it down and you will see. So after 238 days, your account will be $48,332. It's not easy, but first concentrate on doing the first month. So if you start with 10, try after the first month, try it, at least try to be profitable with making maybe this figure. So it's 12,192. But you see your risk is the same, but as your account grows, your lot size will also grow exponentially. So that is why I'm saying that you need to have, a crucial thing is you need to have a proper system, you need to know a money management, and you need to know where to put your stop loss. Until you know that, until you get to know that, then don't go with compounding. It's very good, it's exponentially growing, and it can basically make you a fortune if you know how to use it. So that is why I'm saying try it on separate account. Open a $1,000 account and try it. So after 3 months time, if you do it properly, your account will be tripled. But you see what lot size is. It's 0.06. That is proper trading. Proper trading is not putting a full lot on $1,000 account. That is simply stupid. If you use a lot size, then your risk would be 30%. I would never advise that. I would never advise it, guys. So sometimes it's impossible to, but let's make it as basically as it was. So if you want to use compounding calculator, you just send me an email and basically I will send this to you. Let's see in this example if it's allowed. No, of course it's not allowed. So the proper management is only allowed through this spreadsheet. So you can trade a full lot with this spreadsheet because it wouldn't allow you. It goes by a proper money management. But if you put it by default as it is, it will do a proper math for you. And this is how I also do it, and how I advise traders to do it. If your risk is 2%, then you can use 0.06 lot on $1,000 account. Now, if you make your risk 5%, then you see your lot size on average stop loss of 30 pips. Of course, if your risk is 5%, your lot size will be higher and your profits will be higher after 3 months. You see, from 1,000 to 19,000. So again, we come to psychology. If you are a gambler, if you want to gamble and you want to gamble with your own money, then you can do it. Make it 30% per trade. Yeah, no, this is 3,000. Let's make it 30%. Look at this. Now what? It gives you the ability to use lot size, but your risk is 30%, not 2%. With 2%, it won't give you a proper risk size, even though if you change it here. So in order to trade full lot, you need to have 30% of a risk put in. Now the numbers will be huge. After 3 months, let's see. Look at this figure. After 3 months' time, is it possible? 28 billion 145,018,677. 3 months time. But I never do that, and I'm not fond of using 3% per risk. My maximum risk is 3%, and basically with 3% of a risk, it's allowed for you. The system and method allow you to do 0.1 lot size, but it's still good if you want to go with compounding, because after 3 months time you can make $5,750 out of $1,000 account. Okay. So guys, if you're interested in this, 100 to 1 leverage, exactly. If you're interested to 1 to 100, if you're interested in this spreadsheet, of course, use my email. You know what my email is, and I will send you this calculator so you can try to play with it at least. Put, I don't know, 50. If you know the method which you'll be using, put a 50 $50 and basically use your risk should be lowered, of course. It's too much. It's too low. Sorry. Let's make it 100. Again, it's too low because it doesn't have a nano account. So I think it will start to grow from 500 or 1000. Yeah, 500. So it doesn't have a calculation of nano lots. It's only usable by micro lots. So basically, with $500, you can start playing with this Excel spreadsheet. But you see what your lot size would be 0.01. And you won't be making much. You see, it's exponential. It's pretty exponential. But using 1000, it's much better. Now, using that small of risk on 10,000, where let's say not 1%, but let's say 2% per trade, it's even better. It's even better. Okay? People, I don't know if you use 1 to 500 leverage, but if you go with this spreadsheet, you will be fine. It doesn't matter. If you just put your maximum account risk and your stop loss, then it will calculate a proper lot size for your account. On Admiral Markets, I think pro accounts can be opened by $1,000 deposit. So basically, you need to have at least $1,000. But also, if you have $1,000, you can use this spreadsheet because I am not sure if it would allow for less than $500. Okay. Yeah, I will send everyone who are interested to have this Excel spreadsheet. I will send it to you. You just email me and you will be given. I use 1 to 100 on pro account, 1 to 100 leverage on pro account. That is what I use on one of my accounts. Not one. Most of my accounts which I'm building over time are more than $1,000, and I use 1 to 100 leverage. So basically, I don't trade with standard accounts on Admiral. I use pro accounts. Okay. So guys, that is all for today. If you're interested in this spreadsheet, of course, you can email me. Don't forget to sign up for new webinars because there will be much more knowledge to suck into, and basically we will be having a live trading lab with Chris, and also we will have how to measure the strength of a breakout tomorrow's webinar. Also, don't forget to sign in for weekly Forex recap, as last recap gave us more than 150 pips, especially dollar yen, cable and euro dollar trades. So guys, thank you for attending. If you don't have any question, of course, hourly and daily pivot point exclusive indicator, I will be giving this only one time. Sign up only for live accounts, and these indicators cannot be found on the internet, so be sure to sign up. This is one-time chance for live accounts only. So thank you for attending. If you don't have any further questions, send me an email. I will be sending spreadsheet to you, and talk to you guys very, very soon. Cheers.